Hello guys, and welcome once again to my YouTube channel where I share with you quality content regarding the financial markets and how you can conquer the financial markets in the shortest amount of time possible. So this is just one of the strategies that I personally use. I and my team, this is one of the strategies that I personally use to analyze the charts, to look at the market, and to take trades basically. So it will help you to make sure that you subscribe to the channel, you like the video, you share the video, you comment in the comment section, you also join our team in the description, links that are there in the description. It will help you to be part of such a community like this, a community of people that are so much interested, so much whose intention is basically to reach financial freedom through trading the financial market. So you being part of such a community like this, like that, it means you also get to benefit out of the combined alliance or the combined mastermind alliance of such high energy like that, of people who are so focused on making money out of the financial markets. So guys, thank you for watching. I hope you like the video. I hope you subscribe to the channel. Let me just go straight into the chat right quick. So let me just share my screen real quick. Let me just share my screen real quick so that you see what is currently happening. So on my chart here, I have gold. I have gold. As you can see, this is gold. So gold is a very, very beautiful pair because of its volatility. So gold, let us look at what is happening on gold, especially the move that we are expecting to happen this week and even the next following weeks. So if you can see, this is a resistance. You can see this is a clear resistance that we have there. Clear resistance that we can all see. That's a clear resistance that everyone can see on gold, right? So that's a resistance. Came the first time rejected, second time rejected. So a basic understanding is someone can say this market can come back all the way to the resistance before dropping. That's a basic retail traders understanding, right? It can do that. But here at the bottom, you can also see that we have a very strong support. We also have a demand there. That's we have a support and a demand there. And we can also see these higher low levels. These are also other targets that we will also target. If we're going to take any selling opportunities from the top, those are going to be our targets there. So basically, this is the information that I need on the weekly. On the weekly, I have all the information that I basically need. But I can actually see that from October 2022, which is from here, we've actually been going up. So now, if ever it's going to start going down, just to give us some base of it, which is in form of a double top or triple top or something like that, in order for it to start coming down, right? So this is basic understanding, basic retail understanding from just a weekly perspective, basic understanding from a weekly perspective. So here I can also decide to draw or put a form of a trend line. You can see a trend line that has been respected there for a very long time. Touch. You can also see that. So it means once I have that trend line broken, I know that I can actually start entering my long trades, first target, second target, third target there at the bottom, up until maybe it goes all the way to the top. That's just a long-term perspective. That's just a long-term bias of what might happen in the future. But let's look deeper. 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 I hope my sound is now better now. Let's look deeper. Let's look deeper now. We're on the weekly, as I said. So now let's go down to a lower time frame, which is the daily. Right. From the daily, let's see if we can get any other details that we didn't see on the weekly. You can see the trend line is so visible, so clear. The trend line is so clear. This trend line, first touch, second touch, third touch here, fourth touch here. That was a swing trading buying opportunity there. Same as here, this was also a beautiful buying opportunity there. So those are simply major buying opportunities that one could have simply taken advantage of. So looking at it from an institutional perspective, you see structure was broken to the upside. That's a breakout structure there. Breakout structure. After the breakout structure, we have a pullback. So let's label our structure. Let's label our correct structure. That's a high there. We have a high. We have a low, right? Higher low because it's higher than this, obviously, right? Higher low, higher high there. Right, this one as well is my higher low. Right, the reason why those are higher lows is because they broke internal order flow. The low that breaks internal order flow is our higher low. So this is external structure that you can see higher high. You can see obviously that's still a bullish market. That's still a bullish market. That's still a bullish market. That's still a bullish market, as you can see. But even if it's still a bullish market, I can see, for example, in this case, I have a supply zone that I am currently expecting the market maybe to come and give us some reversal sales from there. That's a supply zone that I'm expecting the market to give us some reversal sales from there. Right. So if it doesn't reverse from that supply, there are chances that it can even come, test this high again. Once it tests that high, maybe if it rejects, it will drop. Once it drops, breaks the trend line, we're now going down, down, up until maybe we reach that lowest point. That's also a possible. So those are just possible scenarios. The most important thing is for you to get confirmations as also, and also notice how the market will be moving. So this is currently a bullish order flow, right? Bullish order flow market. Let's go down to the 4-hour. 4-hour, let's see if ever we have other details that you can see. So on the 4-hour, I spoke about how you could have caught this buy to the upside. That was a very simple buy. You could have simply used this counter trend line. If you look at this trend line here, look at this counter trend line, follow this trend line, counter trend line, touch, broke and retested. If you have used that break and retest of that counter trend line, my major target you will target to this supply or this high there. That would be would have been your major target. But if you wanted short-term targets, you simply use the previous highs, especially this high where the trend line started. That high where the trend line started could have been your final target after buying here upon the break and retest. Would have bought this. But personally, me and my team, we know institutional. We have institutional knowledge. Obviously, would have bought on the demand and not simply on the trend line. Not here, but actually here on this demand, because we know that every untapped demand must be tapped before the market. So here we would have taken our buys, there. Where is the target? As I said, major target right now. Major target basically it's still that supply there at the top. But if ever you were using these highs here, and also maybe this supply here, this immediate supply before that major supply is on at the top, you would have also all the TPs could have been reached if ever you would have targeted that supply, because about just below this supply you can see there's a lot of liquidity that is lying below there. So that was also a reasonable target there. That was also a reasonable target, which was still a swing trade, which was still a swing trade that would have paid you so well. 1:10 risk to reward. Very beautiful, very beautiful all the way. So this was a beautiful trade along the way, before, in between your entry and your major target. There are so many ways that we use to scaling. If you go down to lower time frames, your 1 hour, 30 minutes, 15 minutes, you realize that these channels here, the breakouts of those channels were simply opportunities for more entries. The breakouts of these counter channels, the channels that will be countering the move. If the move is going up and the counter channel is facing down, those are simply opportunities to scale in. So basically, even right now here, this looks like a counter channel. This looks like one. This looks like a counter channel. You can draw it like this, or draw it like this. Like this. Let me draw it clearly like this. Right. This is also a counter channel, right? This is also a counter channel that one can draw, touch there. Right, something like this. Right. So this one is a bigger counter channel, but basically, where are we expecting to really take more buys is on this demand there that I just labeled now. So that's where I'm expecting a fall market to fall there before a push and the continuation up. Why a continuation up? Because we have an untapped supply at the top, and we are still in a bullish order flow overall. So if it comes there, first target, next major target is that high that I showed you on the daily and the weekly. So if it comes to the supply, we would have made money. If it comes to the high, we also have made money as well. But this is basically the zone that we're expecting to buy from. So let's go down to 1 hour time frame. Let's go down to one hour time frame. Let's get more details. Once you get more details, it means we actually. So these are the counter trends that I was trying to illustrate. that if ever you want to scale in, you can use those as well. Here you could have used, this was a much more clear one. Clear, break retest, you could have entered more buys there. Target was reached. All the way, those were opportunities. So now coming down to the downside, you can see we have internal change of character. We just need to know, because this is our targeted demand, right? Targeted demand is this. And if we let's label our structure, our internal structure. Let's label our internal structure. This is external structure, but let's label our internal structure. Let's label our internal structure. Where is our internal structure? Let's go. So here, where is our high? With this high, with this higher low, because it's higher than that. Right. Let's zoom in. Let's zoom in. Let me go down here. Right. Where is our next? Where is our next? Where is our next? Where is our next zone? Where is our next zone? Our next zone. Where is our next zone? Our next zone is this high there. That high, that is my higher high. Which is this high. My higher high. And somewhere around this zone, I'm expecting my higher low. Right. So it will still be maintaining that bullish order flow. As you can see, it will still be maintaining that bullish order flow. That internal change of character is what qualified this to be a higher high. So after this higher high, in between now, where that higher high and our zone where we're targeting, that is basically where order flow, internal order flow will be expected. So internal order flow, you'll simply be looking at this internal change of character, right? After this internal change of character is the pullback, you enter the cells. Next, you have this break of structure. Break of structure, you expect a pullback, then you get the cells, further cells down. So that is what I'm referring by internal change of internal order flow. So when internal order flow is now being followed like that, you also follow internal structures. In this case, you would have sold here. Change of character, you would have sold there, sold hard, beautiful sell, targeted this low, TP was reached, break of structure. After the break of structure, we expect a pullback. Basically, now I'm expecting a pullback into this supply that hasn't been reached there. So that supply hasn't been reached, and I can also refine my trend line to this, like this. It makes sense like that. So coming there, that's also another selling opportunity, targeting this low. You can target this low or this demand there. Personally, I'll be targeting that demand. That's how you can actually catch these cells down here, right? So basically, my focus is what happened today and what happened today that you could have actually taken advantage of, and what is going to happen mostly tomorrow that you can also take advantage of. So I'm focusing basically on this week. I can't go all the way back down to history, but I will simply focus on this week. Right. So this is also the trend line there. So right. So break of structure is very pullback. Pullback, you can also put a Fibonacci retracement from point A to point B down there. You can also see that our zone, our supply zone at the top, it's around 78.6 and 88.6 Fibonacci, which is a high probability. High probability entry zone when it comes to these pullback entries, right? So here today you could have actually caught some buys. Where is today? Today is here. Today started here, right? Today I think it started here, right? This is today. Today could have actually caught these buys, because remember, after a break of structure, expecting the pullback to happen into the supply, right? So how could you have caught those buys? First thing first, you can actually see that here we had a double bottom. That's a form of a double bottom. Double bottom, that's a reversal pattern. Reversal pattern, it means we're now reversing to the opposite side, and we have a neckline break and retest. That was first opportunity there. We would have bought there. This was last Friday. Then today, you can also see that the market gave this retracement move before a continuation up. That retracement move, it always happens in form of a channel. If you go down to a lower time frame, we'll go down real quick 30 minutes or 15 minutes, especially 15 minutes. That's where we stop from. So you realize that on 15 minutes, it actually gave a very clear reversal channel. This was the reversal channel, the counter channel, I mean, not the reversal channel. So this is the counter channel, very clear counter channel, right? Very clear, very clear. The breakout here, you could have bought your stop loss below, inside here or below here, but inside here, that was gonna be a smaller stop loss, which was gonna be good for you as well. So this was the buy that you could have actually caught today. This is the buy that you could have basically caught today. Right now, we're expecting major sales there on that supply there, where I just placed my. So you actually have pending orders there, strong pending orders there. We're expecting strong sales down. So now this was the move you could have bought there. This was the buying opportunity that you could have caught today by target there. So now this might simply be a pullback into this zone here. I can see that we have some form of, if you check this zone, it was a support, broken, retested, broken. So most probably it's going to go up from there. So this is what is most probably happening, right? So this is how we analyze. This is how we look at trades. This is how we look at opportunities on gold, and this is what we're basically looking at today. This is what happened tomorrow. This is what we're basically looking at and what we're expecting this whole entire week on gold. This is the move. Once it comes down here, we're going to enter buys all the way to the upside. So guys, I hope you understand what is happening. I hope you understand what is happening. If you don't understand, feel free to contact me through the WhatsApp number that is in the description below. You can contact me directly, or you can join my community there in the description so that you get deeper understanding of these concepts of how we analyze and how we trade, basically. But this is basically the basic understanding of everything, the basic understanding of how we analyze and how we look at trades. So the other instrument or the other pair that we're going to look at is the other instrument or the other pair that we're going to look at is Boom 500. Right, this is Boom 500 daily time frame, which is where we start from, right? So the daily time frame, there's a very interesting thing that I like is that Boom 500 is on our Fibonacci level, which is 88.88% there. It's on our Fibonacci level, 88 exactly on 88%, which is a high probability entry zone. So long it's the market is on our Fibonacci level, it's a high entry zone. It's a high entry zone. So it being a high entry zone there, it means let's just label structure for those that are not aware. This is a lower high, major lower high, major lower low, right? Swing lower low. Then where is our swing lower high? Our swing lower high is the high that is going to break internal order flow. That is your swing lower high. The high that is going to break internal order flow. If you follow from here to up there, if you follow the high that broke internal order flow, if you really follow structure clearly, you look at something like higher high, higher low, higher high, higher low. Let's look at the high that broke internal order flow. The high that broke internal order flow. It's this high because it broke this internal order flow. That's our higher high. So same thing here. If you follow Boom 500, you realize that it has been uptrending ever since here. It has been respecting bullish order flow as it was going up, higher high, higher low, higher high, higher low, higher high. This is our higher low, higher high there, higher low, higher high there, higher low. So ever since the bottom there, 500 has been bullish, or we can say it has been in a bullish order flow. It has been following or respecting bullish order flow, right? So where bullish order flow is going to be broken is where our that's level. That's where we're going to say that's our lower high, swing lower high, because it will be lower than this previous one. I'm expecting it to be there. Why there? Number one, we have 88%. Number two, you will realize that on lower time frames already we have established on 4 hour, 1 hour, we've established already that internal change of character, which is internal break off this internal order flow, which is a good thing now because it's a positive sign. So it means once we enter our cells, we also expect this first daily target to be broken. Once it's broken, you can see something like this. You can see something like once it's broken, once it breaks here, you can see something like a reversal before a continuation because it's now going down. So as it goes down, it doesn't just go down in a straight line. It can go down something like that, respecting order flow. So on the daily, I have a zone 88%, right? Let's go down to the 4-hour. 4-hour, let's see. 4-hour, you can see that we are dropping nicely. You can also put a counter trend line. There's nothing wrong with that. That is basic retail knowledge. That is basic retail knowledge. You can put a trend line there. You know that once your trend line is broken and retested, that's an entry. But as we focus much more on the deeper details that concern structure, the deeper details that concern structure. So let us go down to 1 hour, which is the time frame that maybe I might stop there, or even go down to 30 minutes, depending on the amount of time left. Right, this is the trend line. Right, on 1 hour, what was I saying? I was saying the high that will break internal order flow. Let's follow structure clearly. I want us to follow structure clearly. Let us follow structure clearly. You realize that structure was not broken. Structure was not broken as it was going up. Higher low, higher high, higher low, higher high, higher low. Right? This is not a higher high. This is basically sub-internal structure that is there to confuse you. This is the high, this is the low. This one here is simply unnecessary fluctuations. So after the break there, this is our higher high plus side and that higher low. Higher high, higher low. Higher high, higher low. Higher high, higher low. Let me continue. Let us continue, let us continue, let us continue. Let us continue. Higher high, higher low. So you realize that other swings, they are shorter than others. When you see the length of the swings reducing like this, hey, this is now a secret that I didn't want to share. When you see the length of your swings, of your swing moves reducing, it means momentum, the market is now losing momentum in that direction. So here it was a sign that we're now losing momentum to the upside. So that's also another sign, one of the confluence that we can actually say. It's actually a confluence to say momentum is now reducing to the upside. How did I say that momentum is now reducing to the upside? By the creation of shorter swing moves. So this is the supply zone that was left behind. All this is liquidity that will come to be taken out. So change of character, which was where the order flow was broken, that bullish order flow, that's why it was broken. So where do we expect our higher probability cells? There, your stop loss, you can just put it above there. Higher probability cells there. And our target, you can target that higher time frame target. You can use 4-hour or the daily for your first major target. Your first major target, remember I said, is that daily higher low. That daily higher low, I think it's around this region. I think it's around this region. Let's just go to confirm, but I think it's around this region, that daily higher low. So that can be your first major target. Why that one? Because you know that once it's broken, or if the market comes and fails to break that, it can actually continue going up. But if it comes and breaks there, you know that it's bound to give a reversal, especially here. Once it breaks there, it means it will come to the next level, which is this demand here. It will break, come into the demand, pull back. That's where it will give you a pullback before a continuation. Pullback, you simply use your Fibonacci. Your Fibonacci, you use it from point A above there. It will be above there, point A to point B, which is around this region. It means our pullback can happen either around 78.6 or 88%. Around those regions, that's where you'll be expecting your pullback. Right. So let's go down to the daily and confirm, is that the correct zone, but I believe it is. I believe it is based on experience and based on skill and exposure to the markets. We now know the zones clearly. We now know what is what, which is which. So basically, that is what we are looking at. That is what we are looking at. That is what we are looking at. Yeah, that's the zone. That's the correct zone. So that's the correct zone. Correct zone. You can even put your target here on this demand. That is, if ever you want to maximize, you can even put your target all the way to that demand, which is going to be around 1:20 is to 1. This is a beautiful swing trade. Beautiful swing trade, which you'll be scaling in as it will be going down. You'll be scaling in as it will be going down. As it goes down, giving you those counter moves, or those counter channels to the upside. You actually be scaling in more and more. So this is the higher probability swing trade that we are currently looking at right now for boom 500. Once it breaks this trend line, it tests simply opportunities for you to be scaling in. So basically, I'm expecting it can come to the trend line, give a pullback where we want it, go down, pull back into the trend line, come down, maybe give us a channel like this, go down, maybe do a consolidation, go down. So all these will be opportunities for scaling in. All these will be opportunities for scaling in. This will be an opportunity to scale in as well. So first entry, second entry, break and retest there. Third entries, you simply use break and retest or break or this channel. You can also use this channel. So all those are opportunities that we are going to be having as it will be coming down. This is a trade that I'm going to do another YouTube video as soon as the market would have reached down there, so that I show you that what we don't talk what you don't know. We know what we're saying. We know what we're talking about. We know what we're saying. We've been in this game for a very long time, being quiet and being silent, only putting in the work, making sure that we have mastered each and every aspect of trading, whether it's retail trading, institutional trading. We know all of that. We are aware of how retail traders are manipulated. We are aware. We are aware of how institutions trade. We are aware of all of that. So this is the information that we are giving you now, that which you must take seriously, especially if ever you want to be so serious about this and you want deeper stuff. Feel free to contact me in the WhatsApp number that is in the description. Feel free to join our groups in the description below as well, and make sure that you're connected with us and you're making money with us. So guys, thank you for watching this video. I hope you gained so much value from it. I hope you gained so much value from it. Thank you for like the video. Make sure you like the video. That's the only thing that you can do for me, to like the video, share the video, comment in the comment section, join the community in the description below. Let's make money together. Let's make this money together. So guys, thank you for watching. See you in the next YouTube video. The next YouTube video is going to be a very serious video where I'm going to talk about spirituality secrets in trading. It's going to be a serious episode 2 of spiritual, the scientific and the spiritual secrets that are involved in trading. It's going to be episode 2 of that. So make sure that you don't miss that one as well. Make sure you hit on the notification bell and you don't miss any single video that I'm going to be publishing on this channel. Thank you guys for watching. Peace.